Hello everyone and welcome here to a quick video to show a Python file that I have done that is actually very useful here for Forex analysis, and I'm going to explain why. But first we're going to do some statistical analysis. We want to know basically what is the distribution of time spent per price level per Forex pair basically. So right here, we're going to call a couple of dependencies, right? We're also going to call it throughout the Jupyter Notebook because this is a Jupyter Notebook, and sometimes I just disregard what's behind and I'm just going to focus on the cell itself. And then at the end, I just can trim it down and I'll leave it in the description, the code itself, the file, right? So we're going to do an analysis over euro dollar, dollar against the yen, pound against the dollar, euro against the Swiss franc, euro against the pound, and then we got renminbi against the dollar, and Brazilian real against the dollar, right? So here is actually the opposite, right? It's actually USD against BRL, so I'm going to change this. And here is also USD against CNY, if I'm not mistaken, so I also have to change that. But disregarding that completely, we're just gonna go through here the code, right? I just did like a for loop here to basically give me the price levels of the last 7 days. And what was the time spent per price level. So looking at the code right here, I call the dependencies again. As you can see, I created the symbol list, which is the list that I'm going to call from Yahoo Finance, right? So in this list, I include all the ticker symbols basically to call from Yahoo Finance. They are you can call them like this, equal X at the end, and the pairs against dollar, which are not the main ones like euro dollar, GBP against the dollar, they are actually JPY equal X, CNY equal X, VRL equal X. It doesn't really matter, right? But then coming down here, we put that the end date is now, right? Yeah, we use the package that's already innate from Python here. And then obviously I did all the code here in ChatGPT just so it's so it's much faster. But then I'm going to here create a symbol date data dictionary where I'm going to store the symbol data, right? And then I'm going to do a for loop for the symbol in symbol list. So for each symbol in the symbol list, I'm going to say that ticker, creating a variable that it's ticker, is equal yf.ticker, which is the function that we're going to call from the library yf. And then we're going to say that the symbol, which is each of these symbols, because we're doing a for loop, is actually going to be stored in this variable, the information that we're calling this symbol. And then when we want to know the history, you just do the ticker.history and then start date, the date that was 7 days ago, and then end date today, interval 5 minutes. We're using the 5-minute information so we can get more granularity, right? This is very important because all the volatility metrics, everything that we're going to calculate is going to be based on this. Nevertheless, we're going to go through history, cumulative return, percentage change, and then we're also going to do here the plotting. So we're going to do also a for loop for the plotting. So collapsing that, we don't need that. It's very interesting. We can see that there's more time spent at these levels, but it doesn't really say to us when it started and when it ended. I can put that in the for loop that is regarding the plotting. I can add that because matplotlib allows me to do that. But I can also plot it, do a for loop to plot from 0, so 0% starting here 7 days ago. We actually distributed all the way down to minus 1.25, and we only went to 0.25 in the euro dollar above from the start level of 7 days ago. So this is kind of bearish, right? We're seeing that there's a bearish kind of price action right here. And this is just an example. For example, dollar against the yen is actually pretty strong right here. So we can conclude here, not directly, that there's a negative strong correlation. But yeah, this is very useful, right? Straight away, I'm not going to go into the code itself. I'm going to leave it in the description so I can make it as quick as possible. But then here we have the cumulative return of the assets. Obviously, we have here the weaken, so I need to also take that into account. This is a very primary analysis. And some pairs like the real, sometimes they get a little boring right here, and they just do this, right? So yeah, nevertheless, we can see that we have a lot of already the cumulative return from 0.0 to the deviations here throughout the week. So we can see clearly the 5 trading days right here that, well, what are the most strong currencies? So what is actually the trend going on for majority of the currencies? Which ones are the stuck currencies, right? And this can give you an idea of volatility right there, right away, right? And then we want to have the correlation matrix, obviously, and then we can see, for example, that euro dollar and dollar against the yen are negatively and strongly uncorrelated, as well as dollar against the CNY and euro dollar. Actually the same correlation for the last 7 days of trading, reminding you that this is for the 5-minute time frame, right? After that, we can also see, for example, real against dollar against real, right? So we can see that there is a positive correlation here with euro against the dollar. Maybe it has nothing to do with causality, right? So you need to assess that. And then we can also see the volatility histogram, and you can see that dollar against real is the most volatile one by far, right? Really by far. And the reason why is obviously the current news around the president, and also the central bank moves for the interest rates are very aggressive, at the same time that you have a very hard time for the fiscal policy. So all of that together is adding here for a lot of volatility in dollar against real. So this is very important to understand if you are a day trader, if you are a swing trader. So yeah, we're not going to go into the code right here because I'm going to leave it in the description. And right here I have my API key at the moment, right? So I tried to show, but unfortunately it's going to show. So I'm just going to leave it in the description. If you have any questions whatsoever, you can just leave it in the description, right? So we have here Forex pair statistics. I need to do some work over the volume as well, because the volume is not showing whatsoever due to being extracted from Yahoo Finance, which doesn't have access to the volume for Forex pairs. And volume in Forex pairs, there it's actually OTC. So it's very difficult for me to get actual volume right here that it's you can use. In Forex, we don't really look at volume usually. So as a whole right here, we can see the mean close, standard deviation, and range for each of the pairs. Then you have a news sentiment analysis where we're looking at the news that came out in the last 7 days and doing a separation between what is positive, what is negative, and what is neutral. After that, we have here the correlation of the news and volatility, right? So we want to correlate the current volatility in the market to the news that are coming out. So right here, for example, gains for the dollar as American inflation rises as expected. So a rise in American inflation, as predicted, pushed up the value of the dollar. Euro plunges as Eurozone PMI sinks in November. The euro fell in value as Eurozone PMI data came in lower than expected. Dollar strength amid signs of US economic resilience. Signs of resilience in the US economy led to a rise in the value of the dollar. So here you can have a very nice basis of why things moved due to news. And I think this is very important for someone that's new and trying to look at the market. It's very interesting to have an idea right away of what is happening, right? You can learn a lot just by seeing this. You don't really need to go over much more details because here you're going to have the news. And with the news of the last 7 days, which are fresh from Yahoo Finance as well, you can look into other sources. Maybe they're even better. I'm using Yahoo Finance just for simplicity here, and I'm going to try to expand into this and even try to create a GUI, so a graphical user interface, for the purpose of having a dashboard and really having everything in the dashboard and being able to basically manipulate data live and be able to access real life data as well. So I will be working on that for sure for the next couple of months, but I have some time, so I don't need to get myself ahead too much. Right here, I just need simplicity at the moment. So after that, we can have here volatility data summary. He's not giving me what I wanted, so I need to also check into this. And these are the econometric predictions. So the positive sentiment, low, like we shouldn't call it econometric predictions because these aren't actually econometric predictions. He's not doing what I asked him to do as well. I need to change that. But let's call them just volatility predictions and range predictions based on sentiment analysis and also based on volatility that we calculated previously for the last 7 days and also the time spent per level, right? And so he can say that the euro-dollar pair may face further depreciation in the short term as the news sentiment is mostly positive for the dollar. Traders may anticipate a downtrend with support levels around 1.03 and 1.02 and resistance levels around 1.06 and 1.07. Right, so this is very interesting because this can give you already an idea. And then JPY, for example, you have the positive sentiment which says that yen weakening after Japan election and potential market unfriendly prime minister. So this is actually positive sentiment for USD JPY, not for JPY directly. The negative sentiment says that the new Japanese leader supports raising rates, which may strengthen the yen. So this would be negative here for the dollar against the yen, right? So the prediction is that the JPY pair is likely to fluctuate in the short term, while the election outcome suggests a weakening yen. The news of a potential interest rate hike might counterbalance this effect. Traders may expect sideways movement with support levels at around 150.5 and 150 and resistance levels around 152 to 152.5. Okay, this is very interesting. Again, very useful, very interesting. I basically just fed it with a bunch of data and yeah, relevant data, and I think he can really get it off. And then euro against CHF is not really giving me great signs on the positive or the negative. You have neutral, which small economic differences between the regions, right? Between between EU region and the Swiss region. So the euro against the Swiss franc pair is likely to remain range bound in the short term due to the neutral news sentiment and the relatively stable economic outlook in both regions. Traders may expect a trading range with support levels around 0.93 and 0.927 and resistance levels around those resistance levels, right? So again, here, for example, CNY pair is likely to exhibit sideways movement in the short term as there are no significant positive or negative news sentiments. The relatively stable economic outlook in China suggests a continuation of the current trading range. Right, so he's actually talking about USD CNY, where you're seeing neutral sentiment, not much happening here on China. So we go through Brazil. Brazil, very critical here, mostly negative. So Yeah, we're seeing that USD against Real is actually going up. We should here have the positive sentiment, which should be this is a little bit weird right here. I need to check it, right? I don't like the output that he gave me here, actually. I think he could be telling me more about it. But yeah, overall, this is it, right? I wanted to just make it short, make it just interesting, you know? And take a look at the document that I'm going to leave in the description. It's going to be exactly this one. The Gemini API key, you should be trying to get your own and putting your own right here. And yeah, feel free to do the changes and please comment on the video below as well. As you can see, like it can be very useful here for short-term trading in FX markets for sure. I would like to include here yields in interest rate differentials and macroeconomic data, also the economic calendar, and also extend to other currency pairs in the future, and also make it a dashboard. So there are many things here that we can improve on, and I'm also free to hearing your opinions. But yeah, I'm very excited for this one, and I want to see how it gives me the output throughout time and how I can use it in a daily basis. Actually, thank you very much, and I hope you appreciate this video.